The reason you hand me or Michael Saylor $1 is because we can go and buy more coin than you can, right? I think it's actually a huge bull signal. I don't think it's a bear signal at all, that people are trying to participate in these vehicles. Institutional adoption is something that fundamentally is required for Bitcoin to survive. It's healthy for the ecosystem for crypto to proliferate, right? For fiat to be, deprecated. We've raised money from over 350 investors, and they've invested well over $10 billion in various treasury companies. And I will tell you that
the Blockworks Digital Asset Summit, crypto's premier institutional event, is coming back to London this October, the 13th to the 15th. You'll hear from top names across global finance, DeFi, and policy. Think BlackRock, Circle, Coinbase, and the UK Parliament. Notable speakers already locked in include Danny Masters from CoinShares, Jeff Park from Bitwise, and plenty more to come. There's also a VIP dinner on October the 13th. That's for speakers and VIP ticket holders only. It will sell out. It's all happening at the Old Billingsgate in London. Use code SUPPLY100 at checkout for £100 off. Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian here. We've got a great episode of Supply Shock for you today. One that runs through the currents of what's happening in the Bitcoin and crypto markets. You're going to hear from one of the companies at the nexus of all that is going on in the public markets and the crypto takeover that's underway there. The founders of 10x Capital. We've got Hans Thomas, again, sitting at the forefront of watching these deals come together as they're coming to market. You know the names: Strategy, BitMine, on CNBC all the time. These are the public markets vehicles that are acquiring Bitcoin and other digital assets, wrapping them in an institutional product and winning the hearts and minds of investors. So Hans, eager to hear all that's going on. Welcome to the podcast.
Thank you, Pete.
Well, let's roll in. So I'd love to hear about your spot in this market, right? So my understanding is you're helping companies essentially put the capital together to structure these deals, so you have unique input into what's happening behind the scenes. So how hot is this market, Hans?
Look, we've been involved in a number of transactions in this space, going back to Nakamoto, which is really kind of the seminal transaction where that was a different, candidly, like totally different regulatory regime. Like we really did that under a different president. If you think about it, Trump hadn't really been in office yet when we started architecting that transaction. And so, we've seen this evolve quite a bit with a new SEC, with Trump and the administration really embracing crypto, embracing Bitcoin, and, giving us a really, clear lane to, get out there and, build these companies. And, while initially we were more focused on partnering with friends of ours like David Bailey and putting together, their own companies and advising folks, like Matt Cole over at Strive, or, any of the other, folks that, that we've been, involved with over the last year, in this most recent, cycle, we've been more focused on building treasury companies that we function as the asset manager in, and then, really looking at these treasury companies on a global basis. Because while the US markets are very interesting, we do think that a lot of the growth is going to be global here. And that's really why we, resonated so well, with the team at Nakamoto and UTXO in particular, and looking at these kind of global opportunities. So MicroStrategy is incredibly interesting. Metaplanet actually is an order of magnitude more interesting to folks like ourselves who really see that as the channel through which you're going to see hyper Bitcoinization all over the world, right? We see treasury companies almost as like the on-ramps of the future for them, no different than when you guys were Kraken and, onboarding tons of, folks that had never touched Bitcoin before. It's the same thing here, right? And now that's extending to ETH, that's extending to Solana, that's extending to BNB. We just did a deal with, Easy Labs, which is CZ's family office. office. That deal, we raised $500 million. We're the asset manager on that. We put one of our partners, David Namdar, in. He's the CEO. And we're out there, promoting a very large platform globally. Here in the U.S., it gives you the same sort of thing that we did in Nakamoto, which is like essentially being able to get an asset like BTC Inc. Into a public market sort of construct like this over time. But doing it by building this base of Bitcoin to actually like prosecute the strategy. That's been the key. But the opportunity set that we see is definitely global. We're looking at deals in 25 markets that we find interesting all over the world, and we see an opportunity to do Bitcoin. That's really the core thesis for us. That's, look, it's the majority of the actual crypto market is Bitcoin. And obviously we have a long history in Bitcoin. But, we do see the success of the Tom Lees of the world, the Joe Lubins of the world in Ethereum. Your former colleagues, whom we've, spent a lot of time chatting with over the last year, Joseph Honorati and Parker, over at DeFi Development Corp have done a great job of promoting, Solana Treasury company here. One of our former portfolio company CEOs, the former CEO of Valkyrie, Leo Wald, has been doing that, very well with Sol Strategies up in Canada. So we've seen that, play out. And we do think that there's going to be, opportunities in other, alts as well. But the core focus, I think for most folks that are doing these treasury companies has been Bitcoin. I think that's been wise.
I was going to say, global opportunity here. Obviously, I get it. I've kind of spent some time with these deals behind the scenes. Let's just say I'm an entrepreneur. I'm in Turkey. I'm in Australia. I'm in Brazil. I'm in Argentina. How do I get in touch with you? Is there something that you're looking for? Like, how do opportunities get to a company like yours that is in the position to help them with formative capital?
One of the nice things about Bitcoin is Bitcoin's global, and our network has been global, right? So a lot of our relationships over the years have done businesses in different markets. For example, our partner in Poland, is a Bitcoiner. He owns a big business in that space, in that country, and was able to reach out to us through our network. He had a mutual friend in Puerto Rico, and so it's generally been through that sort of a process, through the Bitcoin network itself. Beyond that, if anyone, and we've had this happen multiple times. We had a company, for example, in Spain that reached out to us that, they were not Bitcoiners, right? But they really wanted to embrace this strategy. They had, a great vehicle. They had the conviction to do it. They did a little bit of it. They liked, their shareholders liked what, they saw, and they reached out to us via the investment banking network, right? So, most investment banks in the U.S. can't really deal with, companies in, foreign markets. Most asset managers in the U.S. can't really deal with companies in foreign markets. Candidly, most investors in the U.S. can't invest in foreign markets and emerging markets. And so they've all been asking us to step in and create a conduit for them, create something where, there's a platform that can identify these opportunities and, be listed here on the NASDAQ so that you can invest in a, U.S. company that can then, go out there and acquire these businesses all over the world. And not just by acquisition, we can also obviously directly list in some of these markets, right? But in many of these markets, you really want a local partner. You want someone who is either a local Bitcoiner or a local financial, authority or celebrity that can go out there and really tell this story. The Michael Saylor, Simon Garovich, Dylan LeClaire, candidly, model has worked really, really well in most of these markets, and that's where we've seen a lot of success. I think that's why we've seen a lot of success for for Tom Lee, for example, right? He had a very strong, broadcast sort of community around him, and that really resulted in a lot of eyeballs on him.
So in terms of what you are providing to these businesses and getting capital together, I'm curious on this capital formation process. Do you have insight into where the money is coming from that's seeding these vehicles? Is it mostly kind of the Bitcoin crypto whales of old who are kind of seeing this as an opportunity for something? I'm curious what your thoughts are there, or is this all kind of new institutional capital that sees these vehicles as a chance to get into this market for the first time?
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
Yeah, having done this many times now, I will say that. So first, around business model. Look, we're really a holding company, right? We go and buy businesses, but we do it in a stair step sort of fashion, because very often you can't really easily take control of a foreign business or take control even of a U.S. listed business without necessitating shareholder votes and a variety of other sort of change of control measures. And so you have to take a balanced approach to injecting the capital into these companies and making sure that you can direct the Bitcoin strategy so that they don't take the money and then go off and do something else with it, or someday decide they want to sell the Bitcoin or something else, right? So we want to be very much in control. That's why our function as an asset manager is so critical, and that's why so many of our team, having a very long track record around asset management. For example, one of our board members and our former CIO is a guy named Russell Reed. He was the former CIO of CalPERS. He was also the CIO of the Alaska Permanent Fund, and also the CIO of the Gulf Investment Corporation. These are three of the largest investors, institutional investors in the world, and so he's managed like over $1 trillion, which is kind of feels like a make believe number, right? But like that requires a lot of discipline and it requires a lot of process. And so we have that DNA. We manage a lot of capital for public companies. We put that stuff into things like T-bills, really mundane things, right? So us having the ability to now go and do that and make sure that your Bitcoin is safe is actually like a very natural corollary. We partner with a lot of the top custodians. We have a multi-sig solution as well. That we've developed with one of the bigger names in the space that we can chat about in a couple of weeks. When we announce it. So that's that definitely part of the thing, right? Is like, okay, not only the custody, but also then the controls and the discipline to not ever sell the Bitcoin, right? To make sure that you're not borrowing against it or doing other things, right? So making sure that you have control over the treasury is critical. And then the next piece I think that's really important is like you alluded to this, is like the capital formation itself. You want to make sure that the money that's coming into it actually goes out and buys Bitcoin, and that's not necessarily a dump of existing coins. Now it's nice to have a lot of coins, on the balance sheet. And we've seen a lot of prominent names in the space, seed these treasury companies with some coin. But I think all of them want to accumulate more. I don't think anyone's really, anyone who's done one of these deals in the Bitcoin space has done it in a fashion where it was a true dump. Now, that having been said, here in the NASDAQ, and I think this rule literally was pronounced yesterday, or announced yesterday, NASDAQ is not going to allow anyone to contribute crypto in kind without triggering a shareholder vote, right, moving forward. So anyone who's done it already, I think, is grandfathered, but there will be shareholder votes required on a go-forward basis. So that should mitigate a lot of the bad deals we've seen, primarily around, we've seen some weaker deals, primarily around the alts, but, some in the Bitcoin space as well that have really not raised material capital at all, and have really been, more or less just transfers of Bitcoin from, someone's, someone's wallet to a corporate wallet, right? So I think that's those are less constructive unless there's also either enough scale to kick off a flywheel effect and then go out there and raise money from the ATM and buy more Bitcoin, or they need to be able to actually find another funding source to buy more Bitcoin, because if they don't do that, then MNAV will eventually contract, right? Because if it's not growing, then what are you paying for? The reason you hand me or Michael Saylor $1 is because we can go and buy more coin than you can, right? Because we're single-mindedly focused at it, right? Like that's all we do. We wake up in the morning, buy. We go to bed at night, buy. We're just buying 24 hours a day, right? And that's not most folks. And then the other thing is, so beyond the single-minded focus, low cost of funds, right? So beyond this whole we talk about asset management and that's discipline. That's like buy. The other side of it is, can you actually create this flywheel? Do you have the wherewithal to actually navigate all of this, right? Like the, Wall Street, the capital markets. And that is a skill set that candidly we've seen more than 100 teams. Maybe 2 of those teams have had that skill set nascently, and the rest have to basically need a partner, right? And so that's where a lot of folks see a lot of advantages in, working together with firms like ourselves, because unlike an investment bank that just raises the money and says, okay, see you later, we can actually bring the whole deal together. Now, that said, we're really not doing a lot of classic partnerships anymore, because one of the things that we've sort of identified here is that the majority of entrepreneurs, again, don't have any of these skill sets. So what do they wind up having? They have a shell, and that shell has a value, but that shell's value in almost every market is pretty well worn. It's no different. Putting a Bitcoin treasury company into a shell shouldn't be a different calculus than putting any other company into that shell. That shell has sort of a price, right? You give someone a certain number of shares, for in exchange for handing over control of the shell, and that's a pretty time honored, pretty well worn transaction type in most markets, right? So these shells have a finite value, and so what you're really looking for, ideally, in a local partner where they really add value, is if they have the ability to promote locally, right? If they have, number one, local language is a big thing, right? So if they're a local language, I wouldn't want to use the word celebrity necessarily, but if they're well known and well respected, by the investor community or by the media community in their, domestic market, then there's value there, right? And that's something that you have to hire a CEO to run any company, and so that's the sort of person that can come in and be, a senior executive and the spokesperson for that company in that market. And so there's a lot of value there. And then, to the extent that the regulatory apparatus in a given country is really complex and hard to navigate, which is the truth in most markets, it's like, it was hard enough to get this done in the States, right? Like, doing it then in Japan is just that much harder, right? So, knowing folks that, are sufficiently well connected, on the ground in markets where you haven't done this before, the trailblazers, that's also very useful. So those are the two things that we really look for in a local partner, in these different markets.
Well, I want to flip the tables a bit here. We just had our producer on, Austin, before the show. He was chatting with you guys backstage. His view. He's a at the market kind of. He's purchasing at the equity level. These are live on exchanges. He's looking at different opportunities, whether it's some of these kind of companies that you've named, a strategy, a Bitmine, etc. So I guess the question is, what does this movement, this new kind of opportunity to do these kind of companies, the question that he asked essentially was, what does it say about confidence in Bitcoin and other cryptocurrencies? And his view was, and his question really was, is this OG sort of getting out? Is this a continuation of the 80,000 Bitcoin whale that we saw emerge on Galaxy, where, sophisticated structure, for people to actually signal that they're not confident in Bitcoin? Or do you think that this is actually just a new vehicle for, kind of the forward movement of Bitcoin and the forward advancement of it?
We've raised money from over 350 investors, and they've invested well over $10 billion in various treasury companies that we've been involved in. And I will tell you that I have not seen one cynical, investment being made here. People don't part with their coin readily. We all know this. And, the opportunity set that they see here is much different than historically, right? So a dump means that you're trying to just monetize and walk away. What people are trying to do here is to get access to their Bitcoin. The reality is, the Bitcoin that's sitting in our ledgers, the Bitcoin that's sitting in our vaults, right? That's not Bitcoin we can really do very much with, right? Like, if we want to borrow against it, it's at a very low advance rate. And look, I've tried to do a variety of different business models. I've been an investor in so many companies, going back to the very beginning, from BitPay all the way through guys like Milo that do Bitcoin mortgages. Like, it is hard to borrow against Bitcoin, right? It's hard to transact in Bitcoin. It's like, there are many solutions that that we can wax poetic about, but fundamentally, the cost of funds, the cost of capital on Bitcoin is very, very high, and you get counterparty risk whenever you want to borrow against Bitcoin. Someone can take your Bitcoin from you, right? So that gets really complex. And so you wind up, and that's just happened so many times. And I think it's so much in our memory. Like, there's been so many of these failures, with counterparty risk, that people are loath to ever, like, for example, use a wrapped Bitcoin solution or anything like that, right? So advance rates are low. If you want to borrow against stock, we want to borrow against Bitcoin, maybe get a 40 to 50% advance rate at scale, right? If you're really tiny, maybe you can borrow more. But if you're trying to borrow against a couple $100 million of Bitcoin, $1 billion of Bitcoin, you're not going to see much more than the 40% advance rate typically. And you're going to have a really high cost of capital, like maybe not double digits, at that scale, because you're a real guy, but like, at the lower end, maybe 12%, like a Galaxy, et cetera, like, those sorts of folks, right? And then all the way down to, there are certain proprietary folks in the industry that might lend in the nines, right? Maybe down to eight at real scale to an institutional counterparty, and then you don't really know what they're doing with your Bitcoin. And so, there's like a lot of rehypothecation risk that you worry about. So, with all that said, being able to like say, okay, I'm going to put my Bitcoin into a company that then I can borrow against the stock, that's wild, right? Because now you're borrowing against the stock typically at like, 80 or 90% advance rate, right? And now that cost of funds is like, 2% over LIBOR, something like that, sorry, SOFR now, it's cheap money, right? Really, really cheap money. And now you can borrow against it, no problem. Or if you do want to sell some stock, you can sell some stock without really selling the Bitcoin in a lot of ways, right? The Bitcoin's still sitting in the Treasury, and you can sell some stock, right? People sell stock every day in these public companies, and they use it to buy more Bitcoin, right? So it's a definite. I think it's actually a huge bull signal. I don't think it's a bear signal at all, that people are trying to participate in these vehicles. Now that said, I don't think you're going to see a lot more high profile contributions of Bitcoin because of what I mentioned with regard to Nasdaq. Without unless it's in a SPAC structure or something else where there's fundamentally already going to be a shareholder vote, right? So in these kind of like direct takeover transactions, I don't think you're going to see a lot of that. And for Bitcoin in general, I think a lot of the whales are interested in being able to diversify out of Bitcoin. Because if you have a lot of coin, right, a lot of coin, we've had a few of these people in our deals that were early miners and that are just sitting on, oceans of Bitcoin, right? At a certain point, you don't need any more Bitcoin. You have a lot of Bitcoin, so you want exposure to other ecosystems. Like, for example, that BNB deal. Like, candidly, we didn't even go to TradFi until the last day, and we raised almost nothing from TradFi in that deal. We had $2.4 billion demand in that deal, and that was. And we had only a $500 million hard cap. So, a lot of hard decisions. But like most of that demand was coming from folks that had never invested in another treasury company, and were big time Bitcoiners that just knew us. And they were like, well, if you guys are going to lean into this deal, we're going to lean in with you.
Well, I think to what you just said, to Austin's question, as a retail investor, you just said that these OGs are kind of looking to diversify out, right? So I guess, from his point of view, it's like, how do you not take that as a negative signal? If, in part, these people who are sitting on these oceans and oceans of Bitcoin do seem to, at this point, want something else, maybe a little bit of something else, but they're still trying to diversify, in your words.
That's just human nature, candidly. Like, no one likes all their eggs in any one basket in general, right? And even Michael Saylor, like, was on TV yesterday, supportive of these other digital asset treasury companies because it's healthy for the ecosystem for crypto to proliferate, right? For fiat to be, deprecated, and fiat institutions to be deprecated, DeFi to proliferate, right? So decentralization is a positive, and supporting it is a great thing, right? So Bitcoiners historically, especially whales, have supported so many projects that would have been controversial to someone who is a true purist. And we're always going to have the kind of like Antonin Scalia's of Bitcoin that are like just, they're still stuck in the original white paper and they're not going to, migrate beyond that, right? Like, true to the letter of the law, right? And then you've got guys that, want to see Bitcoin expand across the ecosystem, right? So, Binance is a great example, right? Like, that's like one of the largest holders of Bitcoin on the planet. And I don't think anyone's sold more Bitcoin to people than Binance, right? So like, supporting an organization. And if you look at the original cap table, for example, BNB, some of the top Bitcoiners in the world, like that are on that, that are original like investors in it, right? So I don't think that's at all strange to support projects that support Bitcoin, or support Bitcoinization or support, digitization of the financial system, right? So I think, that's totally to me on message for what Bitcoin, is about, right? But that said, you're always going to have folks that are like, nope, if it's not like, straight Bitcoin, in cold storage, it is trash. And this is not for them. It's fine. You know what I mean? Like that's okay. But what this is doing is it's creating a tremendous on ramp for the rest of the world. Like institutional adoption is something that fundamentally is required for us to, for Bitcoin to survive. Because the other alternative, I mean, where we are in the mining cycle, right? Like, mining economics, and I was a miner, right? Like, I had 135 megawatts in the Tennessee Valley. Like we we know what it's like to have to mine. It's challenging, right? I think if you if you look at mining economics today, it's hard to argue. I mean, obviously today at all-time highs, great, right? Next winter, I don't know, right? And so like every winter, that question gets harder and harder to answer. When are we going to turn them? When are we going to turn everything back on? When does it make sense, right? And I think that's one of those things that people have to think about. Like, if you want Bitcoin to survive here and transactions don't really pick up, and that's not the future, right? If everyone's holding their Bitcoin in cold storage, right, and no one's transacting in Bitcoin, what is going to create the incremental bid that continues to send the number up and to send the utility up, right? So utility as a reserve asset for like sovereigns, I think, is a huge thing, right? And especially if they actually buy it as opposed to to confiscate it, which has been the historical way of countries for getting their hands on Bitcoin, right? So getting them out in the market and like actually creating a bid could like be game changing for Bitcoin, and not just Bitcoin, for all money, right? All money.
If you're a retail investor and you're looking at the public market opportunities, obviously right now you go to something like bitcointreasuries.net, there's hundreds of options now of companies that are doing this. How do you be discerning, or how would you advise that these investors kind of scrutinize these companies in the same way that you are?
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
I'd say the first thing that you need to look at is whether or not there's any debt at all, right? So even convertible debt needs to be scrutinized. Now, this is the bane of everyone's existence that runs a treasury company. Even Michael Saylor today, if you were to go to him, I guarantee he would tell you not to use debt, right? That's why he's created such a nice structure. He and Fong have this. I mean, it basically turned MicroStrategy into a CLO. It's like, this beautifully structured, vehicle that has no risk to the Bitcoin anymore, right? Anytime you have debt that has risk to the Bitcoin, you're in a position where people are going to wonder what price Bitcoin has to hit for you to have to sell your Bitcoin. And that narrative will overwhelm every analyst call. It'll overwhelm every investor call. And it takes the eyes off of the ball, which is like, well, I'm never going to sell the Bitcoin anyway. Come and get it, right? Like, I used to give Saylor grief about like, oh, in the last winter you couldn't buy, you were trading below, right? He was only trading below for like a couple of weeks. That's like overly harsh. Candidly, I'm the first one to admit
Yeah,
that.
there's still a big Wall Street Journal profile.
But like, I think we all like, went a little bit, overboard on that. Like, if you have conviction, you don't have to sell. Just like most things, like you have time, right? Like, it's not like the moment, Bitcoin, moment you trade below NAV, you need to blow out all your Bitcoin, right? So, and
But I think the end investors, especially on the retail ends, right? So there's all these kind of ways to participate, but the people who are on their E-Trade accounts and they're looking at these vehicles, right? They want to put $1 into the public markets, and they either want more dollars or more Bitcoin. So how do they get more Bitcoin?
I think if you're trying to get exposure to more Bitcoin, you want to give money to the guys that are able to buy more Bitcoin than you are. And there's two ways that happens. One is obviously they have the highest conviction, and two, they have the best structure to actually, go out there and buy at the lowest cost of capital. So, that could be a MicroStrategy, like 2 years ago, right? Today, that's a different argument, right? MicroStrategy today is obviously trading at a much lower MNAV, which implies that they're buying slower on a percentage basis than like a Metaplanet, right? So the highest growth opportunities are the ones that are hardest to access, candidly, right? They're the ones that are like closest to the beginning with the best management team that have no debt and, are going to raise enough money or have enough money raised to have a flywheel effect. And they have to be in markets where they can actually harness the flywheel effects. And what we mean by flywheel effect is that when the stock price goes up, they can raise money like that, right? So MicroStrategy or any other NASDAQ listed company can raise money in the market the moment that the stock price goes up, which means that when they announce that they bought some Bitcoin and the stock price goes up, they sell the stock, they sell that high volatility asset, the stock, and they swap it for the low volatility asset, the Bitcoin. Then they report that the Bitcoin, got bought, stock price goes back up, and they rinse and repeat. That's the flywheel, right? That's what's like effectively a zero cost of funds. That's why that works so well. You got to be at a certain scale to make that work, right? Now, Saylor, if you'd asked him last year, because I did, what scale I would need to make these companies in order to harness the flywheel, he said $1 billion. Today, we've seen from folks like Joseph Honorati and those guys that like with much smaller companies that you can harness those flywheel effects at a smaller scale if you have a strong enough marketing machine and a strong enough capital markets machine, right? Both of those things together, like like a Nakamoto, type marketing machine, with a 10x type, capital markets machine, can create those flywheel effects at smaller scales. And that's kind of what you have to do in a lot of these emerging markets, right? Because you're not going to put $1 billion into a random company in Bahrain, like we announced earlier this year, right? Like, that's, there's not enough liquidity in those markets. But, and this is what's really interesting about, our overall strategy and why I think everyone has demanded that we do this. It's a product of reverse inquiry. Like, I'm not in a rush to be a public company CEO again. I've done it. And it is, you got to be like Saylor or Bailey. You got to be on TV all the time, right? The reason that we've been compelled to do it is largely because you can't. Not only is it really hard for investors to invest in emerging markets because they just don't have the rights to do it if they're institutional investors, or practically speaking, most people with an E-Trade account just can't buy a random stock in Bahrain, right? But there's very limited liquidity for these stocks in these other markets. Like, look at that, Smarter Web, awesome, deal, in the UK. It's on an exchange called Aqueous, where it represents 95% of the trading volume. So even though it's now $1 billion company from like $1 million company, like literally 1,000x, it is like, it would be impossible to sell, at $1 billion, right? It'd probably be impossible to sell at $100 million, right? So it's the liquidity is definitely a question in these emerging markets. But if you have them in a NASDAQ listed vehicle, then if anyone did need to sell, that would be fine. And we're never going to sell because, again, we're long the Bitcoin. So for someone, a retail investor that wants more exposure to Bitcoin and wants the type of returns that you can get in emerging markets, you really need to invest in a company like Nakamoto, or like our next upcoming deal that will be able to get exposure to these emerging markets where you do have much more growth, where Bitcoin is hard to buy, right? Where there are like access narratives, right? And this is the one last thing I'll say, and where actually it's interesting, where there isn't really a local flywheel effect. So where it really makes sense to invest in that NASDAQ listed entity that can actually produce a flywheel effect. Well, what do I mean by that? So let's say we have a slate of 20 deals all over the world, right? And we announce the next one. Like you saw the first one, great, everyone's very happy. We do the next one. When we announce the next one, let's say it's our deal in Poland, and we announce it, boom, stock goes through the roof, right? And we then are able to raise money in the market, and we're able to now fund the next deal. Not necessarily the Poland deal; it's already paid for, right? But then the next deal, and the next deal, and the next deal. So this ability to essentially harness the flywheel in the U.S., which is the deepest, most liquid, most Bitcoin hungry market in the world, right? Being able to harness that flywheel here, and then deploy that capital into the emerging markets, is a huge arbitrage opportunity. So that's big. And then the last thing I'll say is, like, a U.S. stock, really does work well because anyone in the world can basically buy a U.S. stock. U.S. investors really can't buy stocks in most other places in the world, and most investors globally can't buy stocks, except in their home market and the U.S. The U.S. is like the NASDAQ and the NYSE are like the markets that almost everyone in the world can access pretty easily. You can even buy them out of China, right? You can buy them 24 hours a day. So it really doesn't matter where you are. A U.S. stock makes sense. And so companies that have exposure, like, that have great management teams, that are big enough, that have the, wherewithal to actually harness that flywheel effect, those are more potent to me than good marketing long term, right? Because long term, marketing creates hype and like creates volatility, and it's great, right? But ultimately, what it comes down to here is, like, are they executing well, right? And so, as a Metaplan, again, great example. That's an execution story. They've done good investor relations, and yes, they have the Bitcoin Magazine franchise for Japan, but that's not really that big of a deal, right? Like, what's a really big deal is that every single week Simon reports positive news about buying Bitcoin, right? And then every single week he tells you he's going to buy more, and then he does it, and then he reports it, and then the stock goes up, and then he buys more Bitcoin, reports it, and the stock goes up, and then he sets a new target, and then he buys more Bitcoin, and like it's just that virtuous cycle, that flywheel is something that is an execution driven flywheel. It's about saying what you're going to do, doing it, rinsing and repeating, and like Saylor has hammered that into all of us over the years, like transparency, transparency, transparency. Just be transparent. Tell me what you're going to do.
Well, there's two more classes of company I want to get to as we round down the conversation. The first is we've seen some industry companies go to market that haven't employed this strategy. Coinbase may be doing a little bit of this, actually starting to acquire Bitcoin. But the other big one that really hasn't fast followed this is Block, obviously announcing the new miner over the last couple of weeks, making a big splash. But big public companies haven't exactly embraced, this kind of flywheel structure. And the next category would be, the Microsofts and the Metas, the activist shareholders, have kind of gone to these boards, made the pitch that they should pursue this model. So I guess for these two groups, if you could give us, why are they laggards to the strategy and why should they adopt?
Those are good questions, Pete. I got asked this question on a show yesterday, specifically, like they had me looking at charts of Microsoft and Apple and everything like that. And like the reality is, look, I've been pounding a lot of boardroom tables for the last year and really almost year and a half, trying to get people to put Bitcoin on the balance sheet. I've got some companies that I've been an investor in from very early days they're trading well below cash. They might have several $100 million of cash and they're trading at like, a 20-30% discount to that. Obviously, you should be putting at least the delta in Bitcoin, and, hoping that gives you something. But the reality is most board members are on the other side of retired, right? Like, that's just the reality. And once you get to an at scale public company, not necessarily, these emerging growth new companies, but an at scale legacy public company like the classic melting ice cube, unless it is truly dying, everyone in that public company is living pretty well, right? The board is well compensated and doesn't really need more money, right? They're not looking to hit home runs. They already won in life. They're on the board of a public company. Like that's the, top 1% of the 1%, right? And, then you have the management typically is living off of these melting ice cubes. So it's really hard. It takes conviction. That's why I have a tremendous amount of respect for what Saylor did years ago, like, because it was not a small company. Right. He was a $600-ish million business when he did this, and, similar scenario, but he followed the playbook, right? Like, take the existing excess treasury, put it into Bitcoin, take the excess revenue, put it into Bitcoin, stop paying a dividend, put that into Bitcoin. Right. Those three steps, if companies, followed them, they could replicate the strategy. Right. Now they'd always be a distant, second, third, fourth, fifth, hundredth to, follower to a MicroStrategy in the US. And so I think that's what deters a lot of folks is like, it's a Me Too strategy for many of them. And many boards, companies like this, believe that this is a fad. Right. They don't the same way that, every single bull market, someone says that this is it, Bitcoin will be gone, by the next market. Right. Like how many of us have news clippings like that hanging up someplace, like the time that someone said Bitcoin was going to, go to zero. Many of these folks are, of that generation or of that mindset where they don't believe in Bitcoin. So, many of us who believe Bitcoin is a foregone conclusion and have been in it for many, many years, that's a different story, right? But for folks that are relatively new to the story, they still have the same skepticism, and that's what the majority of boards are kind of flush with. People that are like, candidly, they live off the fat of the land, and they've been doing so for a long time. Now that's my bias as a shareholder that's been pounding the table for this for a long time, and I think they might have better defenses than I'm painting them with. On the other side, in terms of like the really big corps, right? You could argue that some of these companies, have actually harnessed this well. Like Tesla, for example, has been able to harness Bitcoin exposure to broaden its appeal to its shareholders. And that's been really it. It hasn't been necessarily to create like true treasury level impact. And there's a general fear of over-engineering Treasury because there's a cautionary tale that everyone should be aware of, and that's Porsche, basically losing control of their business and being acquired by Volkswagen because of their currency hedge. They were actually supposed to buy Volkswagen. It flipped the other way around because they blew up their currency hedge. So people, and we were talking about billions of dollars, right? So people are kind of loath to like, take a lot of risk on their currency hedges, and loath to take a lot of risk on their treasuries. And so a lot of people will look at a Bitcoin treasury as, essentially something that is higher volatility and more risky. Because again, we look at this as like, what did Taylor say to me, a few months ago? He's like, Hans, we have a monopoly that goes up 60% a year. What more do we need? And he's right. Like it's a great asset. The problem is it doesn't go up like this. It goes up like this. And like that volatility scares people, right? And so that's what makes it more challenging for a big corporation to adopt Bitcoin as a treasury asset when their primary narrative is not Bitcoin, right? And so as a secondary narrative, currently there's not a tremendous amount of investor appetite, but we've seen the template work with Tesla. Um, with Block, it's a little different. Obviously you have a CEO there who is, like a very well liked Bitcoiner, very well respected, occasionally Satoshi-fied, right? Bitcoiner. So like, this is a different scenario, I think, than like Satya Nadella at Microsoft. Like he's going to have a much harder time saying I'm YOLOing into Bitcoin, beyond the board support, right? Like, and they continue to have, I mean, it's the grandest of all melting ice cubes, right? So, they have this enormous business. It's a hydra. And so it would require someone to believe that there is a true existential threat to the business. Now, I would argue that there is, because OpenAI is now off the leash and off the chain. There's a very good chance that a lot of the gains that Microsoft has made in the last few years could really unravel rapidly. Their gaming business, which is a huge business for them, similarly, like becoming a liability in a lot of ways because it's extraordinarily expensive to support that business, and a lot of that stuff is moving in different directions now, right? So that AAA game, the console game is not necessarily what it once was. And you have a lot of existential threats. Apple's a better example because Apple really is, if you put Apple in Bitcoin terms, Roxham's very into that, right? So if you lay out, Apple in Bitcoin terms, it just looks like this, it's like literally like just a line like down and to the right, and so like it's like Apple's, we all have, how many Apple products do we have? I can throw like 100 at that, like just within arm's reach of me at this table, right? Like,
At least 4 or 5 over here. Well,
so
final question while we're winding down here. I do want to talk about something that I've been thinking a lot about is the Bitcoin treasury companies versus the digital asset treasury companies. And I'm curious your thoughts on this is, the Bitcoin treasury companies, at least, right? There's this idea you're putting $1 in the public markets, you're trying to acquire more Bitcoin. For the flywheels for these other companies, do you see a difference there in that yardstick? It seems like a lot of the other companies, they would have to either be measuring their success in their own currencies or against the US dollar. It gets a little bit more confusing for me there. It seems like where the worldview within the Bitcoin world is, we're trying to outperform Bitcoin. And if you look at all the digital assets, it's, if they're trying to outperform Bitcoin, a lot of them are down, 30 to 60% in Bitcoin terms over a year. So how does that equilibrium reach? Are we not all competing against Bitcoin here?
I obviously I voted with my feet on this. I've done only Bitcoin and then the one BNB deal, and it's because BNB is the only asset that's actually outperformed Bitcoin since 2019. It's like the only asset, and like it's crazy if you think about that. But it's obviously an order of magnitude, 2 orders of magnitude smaller, right? So how much of that can you really do? And so we are more than 90%, like we're probably 95% Bitcoin as an organization. In our forward slope, maybe that's closer to 92% or something like that, because ETH clearly is having a resurgence. I think what Joe Lubin's done here, and I think a lot of us have a lot of respect for Joe. Like, I think what he's done here is he's rejuvenated that ecosystem,
Joe
utilized.
could be on a very nice booch if he wanted.
And I just like, look, I think he did the right thing, by putting this thing on, and I think it's created like a positive dynamic in the underlying token. Bitcoin doesn't need ETH, as a as a like the way that people say gold and silver. Like it's not like a necessity, but like the market likes it. The market's really really liked the ETH, treasury companies. And I think it's because ETH is more volatile than Bitcoin. I think it's because there's that like, comeback kid narrative. Like there is, and it's of sufficient scale and is sufficiently broadly distributed. And underpins enough other ecosystems, and candidly, like the weakness that a lot of us see in the gas is seen as like a revenue driver for folks within the ecosystem, right? Like something positive. Like we see it as negative from a utility standpoint, but like a lot of people are like, but it makes some of the activities like staking viable, right? So, there are reasons that seems to be working, and it doesn't have the same perceived fragility. I think people perceive a lot of fragility around Solana, right? But I guess the right way to think about it is this: like the same way that Bitcoin treasury companies magnify all that is good and bad, or the perceptions of good and bad around Bitcoin. It's the same thing with ETH or Sol or BNB or whatever down the chain, right? Like like any of the other coins, like their perceived positives and negatives are just magnified by the treasury company wrapper, essentially, right? The treasury company essentially is like a lever on top of that. It literally like just like 10x is the underlying volatility. 10x is the underlying strengths and weaknesses from a public perception standpoint. And I think that the narratives that we're going to see for a lot of the alts are going to be around yield and utility and all the stuff that they've always used just to advertise tokens, right? So, like it'll be the same thing, just magnified by people who are now better storytellers, or if not better storytellers, at least more vocal storytellers that are on TV every day, right? So, like that's probably the difference, is that like they're going to be in the mainstream media telling everyone these stories, and like hopefully, hopefully we see some prudence with regard to tokens that actually have some staying power, right? Like we've been lucky that the overwhelming majority of digital asset treasuries have been in tokens that, despite the fact that we all said that they would go away and go to zero, have stood the test of time. They've been here for a long time, right? So
There are some mind benders, though. You're at Ripple going public as a Ripple treasury company with 80% of the of the supply. There's some that have me thinking. So I appreciate you entertaining the thought process there. I know that there's these questions will be determined by the market. But winding down here, Hans, I appreciate this. Is a fascinating look at really what's happening behind the scenes. Where can people find out more about 10x and all that you're doing to kind of bring these opportunities to market?
for sure. Listen, we have an active X presence. It's 10x Capital USA on X. And you can come to 10xcapital.com, and you can call your friendly neighborhood Bitcoiner, and I'm sure they'll find a way to get in touch with myself, Austin, David Namdar, and the rest of the crew here at 10x. So we're in New York City, in Puerto Rico, Miami, and then in the UAE. We'd love to hear from you all.
Well, of course, we'll be out in London coming up. You can go to blockworks.co/events. We've got not permissionless, but Digital Asset Summit coming to London later this year. Going to be a thriving debate on Bitcoin treasury companies and digital asset companies. I'm sure many more at the market, and a lively conversation in store. Go get your tickets now before they sell out. Hans, appreciate you being on the podcast. This has been Supply Shock, a Blockworks podcast.